So take a look at this. This is the Dow Jones Industrial Average. As you can see, just going down, 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 off a cliff. So I don't think the bleeding is over. We are, in my opinion, however, pretty close to reaching the bottom, which is good news. The market blew through my midpoint limits, and now they are starting to approach and even hit some of my bottom limits. So my bottom limits are my estimates in terms of how low I think things are going to go. We still have a ways to go, and that's an important factor to consider, at least in my opinion. No one has a crystal ball, can't predict exactly what the market's going to do, but in my opinion, we still have a ways to go. Overall, we've done a majority of the falling as far as the price is, but I don't think we're quite at the bottom, but I think we're getting pretty close. So in my opinion, this is what I'm expecting. Continue down here, a couple of surges here and there, and then lower, and then we get the unemployment numbers, and we have another really bad day. Stocks plummet, and then more volatility, and then at some point we hear some real numbers as far as how many infections there are, because right now we're not doing a lot of testing, which is a game that government is playing right now. So without doing the test, you don't know how many people are infected, which can make things not look as bad as they are. But eventually, more realistic numbers will come out, and you'll have the market plummet again. And in my opinion, somewhere around here is where we're going to hit the bottom. So at this point, you'll have your good days, your bad days, not really moving much, maybe some stimulus plan and we get a spike, and then it falls back down again. And at some point in time, it's going to start to slightly tug upwards. I don't think it's going to be a fast recovery, so it may take some time. We'll have some dips when some other issues happen. Some companies start closing their doors, bankruptcies, stuff like that. It'll dip down again, but it won't go much below that lower limit there. Then we'll maybe hear some vaccine comes out and market comes up. People start thinking more positively, and something else happens. But generally speaking, this is kind of what I'm expecting to happen. Could take up to 4 years for us to recover all of our losses. So depending on when you jumped in the market, if you're a person like me who jumped in when the prices dropped, it'll determine how long it'll take for you to get your recovery. But I think we're really close to the bottom. I think I would say within the next 30 days, I think we're going to hit the bottom. We're going to hit a price that we will never go lower than for quite some time. And then after that, there's going to be a period of time where things are kind of sluggish, not really going anywhere. It's kind of up, it's kind of down, it's kind of up, it's kind of down, it's kind of, we get some news and things surge upwards, like, oh, great, things are going good. And we get some bad news and it'll dip down again. But the overall trend will not be as aggressive as it is now in terms of overall just like going down, 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 down. That bleeding, I believe, is going to come to a stop pretty soon. The problem then becomes how long the recovery is going to take. And it's not going to be all of a sudden, boom, the market's booming again. No, it's going to be just that we are going to stop going down any lower than a certain point. That's going to be our support. And then at that point, the overall trend, if you just average out the movements of the stock market, they're going to be pretty weak. Not aggressively going down, not aggressively going up. More or less flat, maybe with a tendency towards rising ever so slightly, depending on how hopeful things sound. Or they might be trending downward slightly, but they already bounced off of their support. So even though it can fall a little bit and still not go below that bottom, right? So if the bottom is here and we get all the way down to the bottom, and then we start, we get a little sort of recovery, just a little bit, and then things start trending downward, we can actually go downward for a while and still be above that support point. So a couple things to pay attention to. Keep an eye on unemployment reports. Keep an eye on, and that's in terms of things going down even lower. Keep an eye on surges in the amount of infected people once we start actually doing some testing. I don't think we're ever going to do the real testing that we should, which unfortunately is going to make this thing go longer than it needs to be. Like that million tests that Trump said he's going to do, not going to happen. He said like in a week we'll have like a million. Salesman, huckster, that's not going to happen. Mark my words. I mean, if it eventually happens, like a month from now, okay. But as far as like right now, that's happening, like he said, no. So for a while, we're not going to fully know how many people are infected. But as testing ramps up, even being not quite to the level of a million, let's say 200,000 tests or 300,000 tests, because it's been spreading for so long, because the administration took so long to take this seriously, like they're doing like a 180, and all of a sudden it's like, first it's a hoax, now it's like, oh, we have to unite and work together. So while they were playing games, the infections were spreading and spreading and spreading, and now we're going to have to deal with the consequences of that latency, which ironically is being repositioned, and that's the huckster move, right? The salesman being repositioned as the opposite. He's saying he moved early, we reacted early, but no, he was campaigning, talking about it's a hoax while this thing was spreading, right? Fox News was doing it, his administration was doing it, his supporters were doing it, and while they were doing that, people were not taking it as seriously as they should, and that was allowing it to spread unchecked for quite a while, and now we're dealing with that. Now it's being taken much more seriously. But again, the testing is still inadequate. So pay attention to the testing. Look out for any leaps in testing in terms of large numbers. Like they say, we're going to test 5,000 people by the end of this week. And don't listen to the administration. Listen to doctors. Listen to non-political voices of authority. Be careful. There are supposed non-political voices of authority that are being influenced by government, but try to look for sources of information that are as away from the politics as possible. Authority figures in the medical field, and they say things like, we're going to have a large amount of tests available pretty soon. Then look for the market to drop again when they start doing the testing and we start getting more visibility. Because right now we're kind of blind to how bad things really are. Because if you don't test, you won't know how bad things are. So once we start to open our eyes and realize, whoa, there's so many more people, look for the market to dip again. And again, the other dip is the unemployment reports. As they start to spike, perhaps smaller dips might be companies filing for bankruptcy and things like that. All these are major negative indicators. Obviously, moves that the Fed might make as well. All these stimulus plans and things like that can have an effect. But I think the biggest things right now I'm looking at is unemployment and testing, growth in terms of doing a lot more testing. I think those are going to be the two major events that are going to cause the biggest dips in the market. Not biggest in terms of what we've seen, but at the end of this, if you look at all the major dips that the market did, the top 5 or 7 are going to include the two next dips that I think are coming: unemployment and a surge in testing, and therefore results. So that's my point, my feedback right now. I'm going to be going very aggressive within the next 2 to 3 weeks, whenever I think we've reached the bottom. And I'm going to pause again, like I've paused right now. I've been waiting to see, because I've been waiting for the numbers to really come out in terms of the infections. So I didn't do any trading. Once those things happen, then I'll reassess And once I feel we're at the bottom, I'll start buying more aggressively, but not too aggressively, because if I'm wrong and it actually continues to go down even lower, that's not going to be a good thing. So I'll invest a little bit more aggressively for a while and pause. And then I'm going to look for 1 to 2 months of averaged growth. So meaning it could go up, it could go down, but if you drew a trend line and the trend line is going upwards consistently for 1 to 2 months, closer to 2 months, at that point in time, I'm going to look at that as a major indicator that we might be coming out of this. And that's when I'm going to go the most aggressive. Now, obviously, never invest more than you're willing to lose. And I'm not going to invest more than I'm willing to lose. So if things don't go my way, whoop-de-doo. Overall, the market goes up over time. So the only real risk for me is it takes longer for me to get my return on my investment than I plan on. I've already looked at a very sort of pessimistic view, and I'm looking at up to 4 years, and it could be more, before we're fully recovered. It may not necessarily take that long, but just based on the data, based on history, I think if 4-year recovery scares you, then I don't think you're taking this as seriously as you should, because 5 years, 6 years, 7 years could be pretty bad, right? So this is definitely a time for long-term investors. Short-term guys, unless you have the capabilities and technology to really track and respond to be very reactive to the market conditions, not really advisable, right? Because you could end up at the wrong time jumping in and being negative for a very long time. So I would advise against that, especially people who are near retirement, playing around with your 401k and getting too much into equities. Bad idea. This is not the time for that. This is the time for the patient, the meticulous, the people who are going to, go stay the course, right? Be very methodical and, plan it right. Don't go too far. Don't be too risky. Always consider that you don't have FDIC insurance, so you can lose it all, right? If losing it all would damage you, then you're investing too much. All right, guys, thanks for watching. Enjoy the video. Click on the like button, subscribe, and until the next episode, be well.